Oracle shares rising in the immediate aftermath of its third quarter results. Adjusted earnings per share coming in above expectations. That's $1.41 a share versus the $1.38 that analysts had been anticipating. Revenue also in line with analyst estimates at $13.28 billion. We also saw the remaining performance obligations at a record last quarter. With us now, Paul Meeks, Harvest Portfolio Management co-CIO and banking professor at the Citadel. Paul, it's good to see you here. So what do you make of these Oracle numbers? Also sort of emphasizing, not surprisingly, the AI upside for the company. As Brian Sozzi noted earlier, you know, the stock fell after the past two earnings reports, but now it's catching a bid.
It is catching a bid, and obviously this news today is, I don't know if it's wholly positive, if it's at least incrementally positive, because after the company announced its last quarter, it really took down estimates, and so did the street. And so you think about it, they came into the print today. Now the stock was up 2% in regular session. Now it's indicated up 5 or 6% after hours. But remember, the EPS estimates came way down to set a very low bar after they last reported. Yeah, I think there's some positive things going on here. However, I think that their legacy business is going to continue to dampen the overall growth rate. And even though they'll get some love with their AI capabilities and also OCI, their cloud infrastructure business that supports theirs and others' AI capabilities, you know, the legacy business is going to slow down that company, at least on a total revenue basis. And so I think over time, you have a compounded annual growth rate here of sales of about 5% and maybe earnings per share with a little bit of operating margin bump and more due to stock buybacks of 10, 11, 12. And it's better than it had been. And it's probably fairly impressive for a very mature snail growth company. But if I'm going to play AI, I would probably sell on Oracle's strength tomorrow. And as Brian says, if it does rekindle some excitement about AI, which has done pretty poorly over the last two trading sessions, I would rather buy those names.
Paul, good to see you, as always. Is there something fundamentally wrong with some of these AI companies that investors need to worry about that the market's trying to sniff out today?
Yeah, I think, Brian, that we continue to have a year or maybe even more, and I'm contrarian with this call, where we're just doing infrastructure build, large language model building, strongly in favor of the customized server companies like a Supermicro, and of course the GPU guys like NVIDIA and AMD, and then we'll have inference. And again, that tilts in favor of hardware and semiconductors. The thing that creeps me out that you're leading into here, Brian, is that I'm not sure that these AI apps from these software vendors will be as, they'll definitely be ubiquitous. I just don't know if they're going to be moneymakers. And so I don't know if I would put a lot of money into these follow-on, someday released, someday hopefully successful software apps that have AI embedded. I still would stick with the infrastructure because I know that's going to work. And I know it's going to work for the next couple of years. I don't know about the other stuff. There could be some cool products, but just like when we got on the other side of the .com bubble and when it popped, you know, we found that, hey, everybody has a broadband internet connection now, and it ain't that great, and it ain't that profitable.
Well, and Paul, it's interesting to me when Oracle talks about this Cerner-led product that is a clinical digital assistant for doctors that makes doctors' notes and updates health records. Something like that is more an enterprise tool versus a consumer-facing app. You know, you have to wonder, will the former be more appealing, more profitable, what have you, than a retail-facing product?
It should be. And of course, you know, they grossly overspent $28 billion a couple of years ago for Cerner. And Brian is absolutely right. It's been a really bad deal very tough to integrate thus far, a real drag on the company. So yes, they're trying to kill two birds with one stone here, to talk up AI one and to talk up AI within Cerner, which so far has been a botched and very expensive deal. I'll kind of believe it when I see it, but obviously on a PR basis, and Oracle is very aggressive, always has been with their PR. Remains to be seen. I also know the major player in that space, Epic, because I've talked to a number of physicians. They're rolling out the same capabilities. This will not be anything too unique to Cerner, even when it is rolled out.
Paul Meeks, appreciate that contrarian analysis as always. We'll talk to you soon.
Yes, sir.